Hello everyone and welcome back to another episode of Market Bites. It is the 1st of April, which means it is the first day of quarter two. What a busy 3 months it was. And just a disclaimer for everyone watching or listening, there will be no April Fool jokes on this podcast. So straight facts or opinions, but no April Fool's jokes. I don't know about where both of you are from, and Brett, I'll come to you first. If you make in the UK, if you make an April Fool's joke after midday, it's bad luck. Is that the same in the US?
I've never heard that one, but I support it. I like that.
And how are you doing anyway? All good?
Doing a lot better after this couple up days here we're having in the market.
Yeah,
the mood's
absolutely.
a lot better.
Oh yeah, couldn't agree more. Everything just feels better. Neja, how you doing?
So my mood is sometimes market related. So you bet I know, you bet that I feel much better today.
Yeah, it's funny how it really can influence one's mood. And actually, maybe we'll just start by going over the markets, having a little look at where we're currently trading. It is just gone 4 p.m. in London. I'm not going to ask you, everyone listening to work out your time differences, but let's just call that an hour and a half after the US cash open. And Nasdaq is currently on the highs of the week, highs of the day, or therefore the S&P 500. Similar, the FTSE up for 3 days in a row. Actually, just interestingly, the FTSE from the low of this week to where it is now is up 12% in the last 3 trading days, and they're not even completed yet. The Nasdaq is up from its low of the week, 5.6%. Big moves across the board. Crude oil trading about $95. Gold as well on course at the moment for its 4th positive day in a row. That would make it 6 out of the last 7 as well. So gold pushing on, Bitcoin trading at 68,500 for, if it finishes positive today, that'd be 4 out of 5 positive days in a row. Everything feels a little bit more positive, I would say. Trump is speaking 9 p.m. I think your time, Brett. So I'll come to you first. You don't know exactly what he's going to say, so my question is a guess for you. The answer. Do you think we've seen the low?
Oh man, that's a great question. I mean, I think if we have the present situation, I would feel comfortable saying I think that was the low or close to the low. The wild card, of course, is the situation going on in the Middle East, and we have no idea what will happen when Trump speaks. We have no idea what he'll say, and maybe contradict it 6 hours later in a tweet. Like, we just don't know, and that's really the tough part of investing in this type of environment. But where we started to get into that Thursday, Friday price action felt not like a full-blown capitulation, but you started to see that sort of panicky, forced selling, real risk off type of, that's kind of how we get towards the lows. So I don't know, it wasn't quite the panic that would be like a full flush, but enough of one that I think an intermediate term bottom would be reasonable.
Yeah. Nesho, are you worried that you're going to wake up tomorrow and the market's going to be on the floor, or do you feel more positive about the situation?
I'm afraid to feel positive. We saw so many surprises in the first quarter. And if you want me to guess, I think that there won't be anything special today, but I'm expecting some news to come when everyone will relax for Easter. So I think that will be the time for some major news to come out. But if we take a look at the first quarter, I mean, SP 500 lost almost 5%, Dow Jones 4%, Nasdaq 7%. I am really hoping that second quarter will be better than this one.
Yeah, fingers crossed. I'm just having a quick look at the 3-month performance, which is basically year to date, isn't it, of the S&P 500 companies. And Obviously, your Exxons and your Chevrons did very well, as you'd expect, up 30 and 34% respectively at the moment. Microsoft, I mean, this, you won't get many periods going forward or looking back where Microsoft is down 23%, 24% in the first 3 months of the year. I mean, that's pretty remarkable, isn't it? Nvidia was only down just under 6%, Google 6%, Apple 6%. You know, they held up relatively well. So obviously a little bit more, 12, 13%. Tesla is 16% down. But I guess yesterday was a great day for markets except energy. It's always tricky, I guess, trying to time the absolute bottom. I did see a fair few people get the vibe at the end of last week that they felt, okay, maybe next week is when I'm going to start to enter into positions, because when you talk about names like Microsoft being down that big and the Nasdaq being down numbers, you were saying 10, you know, I think the S&P 500 very early part of Monday was down 9.9%, almost correction. That's the level where people think, you know what, this could tempt me. So I imagine there's a few people just over the last 36 hours or so, 48 hours are happy, but worried as well with you know, the idea that things could turn around. So we'll have to wait and see. If I had to answer whether we've seen the low, it'd be just a little bit more than a coin toss favouring that the answer would be yes. It'd be very frustrating if we make a new low from here. So hopefully, fingers crossed, we'll be all right. I don't know if any of you saw the comments from Warren Buffett. I think it was yesterday or maybe the day before, and admittedly he was saying this before the market rallied the way it did, but he was saying, you know, if the market is to or would drop considerably more, then they would look to deploy their cash. So they're sitting on incredible amounts of cash, aren't they? And then he also said something now how it's you know, about Apple, how he sold it too soon. And I read that and I thought, well, if one of the greatest investors of all time is annoyed at selling Apple too soon when they bought it a lot sooner than a lot of other people, then, you know, just put things into perspective. But yeah, I mean, it's a lesson in there for everyone, Brett, isn't there? You can't always get it right.
Yeah, I think the lesson in that is actually amazing. When you know, Buffett says, "Oh, I sold too early." It's not like he bought this thing in 1998. You know, he was, I mean, in a lot of ways, he was late to Apple. When he bought, it felt like he was late, even though looking back over the charts, he clearly was still early. But it goes to show, like, even if you are late to the game and exit early, you can still do really, really well.
Yeah, 100%.
And it really shows us how impossible it is to time the market. If he can't catch the right timing and he says that he sold this too soon, put it in perspective of retail investors. It's really impossible to say, okay, now we are reaching the highs, or now we reach the bottom and I need to invest everything at once. It's basically impossible to predict when this will happen.
Yeah, I mean, you can see why people just, you know, look at the stats and use that, especially for longer term investors. A 10% correction, well, historically, a year later, it's higher than it is, you know, historically more often than not. So that's an area to sort of start averaging in, or it's the 14% average year in the S&P 500 drawdown. That's the level people look at and say, well, you know, these are opportunities for me, regardless of what's going on. I've got a long-term horizon. Yeah, it gets a lot trickier the more short term you go on it, but you can understand why people were at the back end of last week starting to eye things up. It does feel more positive now. I'm touching wood that things are going to be okay. We'll know a little bit more tomorrow. Maybe we should have postponed this for 24 hours later. So there's another disclaimer for you all. We're not too far away from the new earnings season, which will be quarter 1. But Nike just reported their earnings last night. I think they beat on the top and bottom line. But last time I looked, they were down about 10%, 13, 14% now, just looking at that chart. And that is a low not seen since 2015. Remarkable, by the way.
That's more than 10 years ago. That's like everything
incredible, down 75% from the all-time high, which we saw in September 2021. What do any of you make anything of this? I mean, for some people, it's like, oh, it's not a surprise, but it shocks me, to be honest. This is such a big company, such a big brand. And by the way, there was a period last year where it rose 50%, right?
Yeah,
Right.
that's right.
Yeah.
I
But I
think that
mean, Neja,
everyone
what's your view?
I think that everyone now is really waiting for this turnaround that they've been talking about, and their new, not that new CEO, Elliot Hill, he was talking about turnaround, and he's still making it happen, but it's not something that would happen through the night. And uh, I was reading something about their report, and I felt like he was very honest about the work is not finished yet, and
Mm.
that the progress is still ongoing. But anyway, I think that this turnaround is real, but it seems to be quite uneven because investors can see this movement in right direction. Anyway, in China, for example, which is one of the most important markets for them, they're losing to local brands like Anta and Lining, and I think that's a big hurdle for them for the future. And they said that they are expecting more decline in the following quarters. So I think this is something that investors will be focusing on the most in the next earnings reports.
Yeah, I think that the China is guided to fall 20% next quarter. That's a bit of a worry, isn't it, if you're a Nike shareholder? But that said, and Brett, you do see this sometimes when a company's being beaten down like Nike, 75% from their all-time high. It's fast forward 3 months to their next earnings report. Sometimes to get that recovery, all you need is a little bit less bad news, don't you?
Yeah, and it's really, the reaction to the news is, I think, so important when you're kind of like looking between the lines. The quarter can be awful, but if the stock rallies on that after a huge decline, that says to me like we found a bottom. Things are gonna from here. We're gonna move forward. We're obviously not seeing that in Nike today. The thing is falling to new decade lows, which is, again, like you said earlier, it's crazy. Considering what an iconic brand this really is. It just has no traction, and I'm not necessarily making a case one way or the other for whether in the US they stop reporting quarterly and start reporting biannually, but this is sort of one of those situations where the company is not focused necessarily on a quarter to quarter basis. They're not thinking in 3-month chunks. Nike's thinking in year-long chunks and saying, hey, look, like, this is an honest assessment. This is just a long process. This is not turning a speedboat around. It's turning around, an aircraft carrier. So Nike's just going to take time. And it actually reminds me of what Neja said. It was probably in December when they reported the last time, but Neja, you said, value without growth isn't value at all. And that is like something that really stuck with me with Nike specifically. And I think is just such a good example of the situation from a retail perspective.
It
Yeah,
is,
it really
and
is.
I think that they will need to focus more on localized markets, how to adapt their brands to the locals, especially in China. They were talking about that. And as you said, it takes time and they will need to find this growth back. Anyway, it's iconic brand, so it still has a worldwide influence, but they just need some more time to turn this ship around.
Yeah, listen, it's not investment advice. I'd be surprised if they don't at some point recover. When is that low though? Time in the market's tough, isn't it? It's tough.
Sure.
It really, really is. And yeah, it's just incredible looking at that. I think if you had said to anyone 10, 11 years ago, is Nike going to be trading higher or lower? Not many people would have said at the same price, but there you go. One to keep an eye on. I mean, at what point does it just offer a little bit of value? But there's probably, historically been bigger companies that have never reclaimed their highs, right? So it can happen. But yeah, a bit of a shocking one. But look, that's that earnings out the way. Obviously, people will rightly focus on that and it'll make headlines. But as we approach the new earnings season, what's your sort of take on everything at the moment, Brett?
Right now, this is going to be a really interesting earnings season, I think, because right now we have this clash and this like divergence between price action and the fundamentals, right? Because with the S&Ps, we have its great week this week, but we're down 5 weeks in a row. peak to trough off almost 10%. But the earnings estimates are not just stable or resilient. They're actually continuing higher and higher for the full year earnings expectations. The estimates are calling 16 to 17% growth. The caveat here being that price action does tend to lead the fundamentals, both on the upside and the downside, right? Markets tend to bottom before, true earnings bottom, or even before estimates bottom. And then same on the upside. The markets pull back and correct before we see a topping in expectations for the year. But it's going to be a question of, is price action overreacting here? Like, do we see too much of a correction just right, or is there really more to go? And we're going to find that out really here in the next 4 to 6 weeks, who's right, the fundamental side or the price action side, because these management teams are either going to come out, report their Q1, whatever that number is, but their outlook is going to be the key. And they're either going to reiterate or raise, give some sort of bullish take, or they're going to come in and they're going to be a little more tepid. Our customers are pulling back, or we're seeing consumers acting more conservative due to gasoline prices. Whatever the reasons may be, it's going to vary by industry and by sector. But that's really going to be the tell on how we move forward. Because if they reiterate a bullish quarter, the markets are going to have to reprice, because when we look at where we are from a valuation perspective, right, like PE, the price over earnings, you need one of those two things to change for valuation to improve, right? You either need higher earnings, higher E, or you need a lower P, lower price. Right now we have both. We have lower prices and higher earnings expectations. So that forward multiple, and I'm sorry if I'm not trying to like run anyone through the weeds on this stuff, but it's like on a forward basis, we're basically back to the valuations at the tariff low, which took us like a 20% correction to get to. So something's going to have to change, and it's either the fundamentals are wrong and estimates are going to have to come down, or prices are wrong and they're going to have to rebound. And we're going to find out what it is in the next month and a half.
Yeah, bring it on. That'll give us a lot to talk about, won't it? Just some of the companies and their dates that have already been released. Obviously, banks unofficially kick it all off. JP Morgan on April the 14th. There as well. Obviously, you've got Bank of America on the 15th, Wells Fargo on the 14th, Citi on the 14th there. So all sort of kicking off. Morgan Stanley, Goldman Sachs in and around those dates as well. I think Goldman Sachs is the 13th, give or take. So yeah, that'll be something to get our teeth into. Do you reckon the geopolitical situation will be an excuse accepted by markets, or are they going to punish if they haven't lived up to expectations? We're going to see similar sort of moves where the market's like, okay, you can say what you want, but you're getting slammed.
I think so. I think that the focus will be on how the companies will explain how they are navigating current situations, especially moves in oil prices, geopolitical situation, all of that. I think that the focus on guidance has been pretty strong in past earnings seasons, but this time I think everything will be focused just on guidance. No one will be looking even at if they're beating expectations or not. Of course, we will take a look at that, and having a beat in earnings is a good point, but I think that guidance will be something that will weigh on where is the stock price going from there. And yes, I think that market won't be very happy if they see that the companies are not navigating current situations that well, or they don't have any particular plan about how they're planning to do, how are they planning to do in following months or in the next quarter. I bet that all managements are currently talking about that, so I'm looking forward to what they will have to say to us.
Yeah. I mean, we're less than 2 weeks away from all of that now. Of course, just from a macro point of view, you've got on Friday latest non-farm payroll number. The last figure was a negative. I haven't got it in front of me. 92,000 or 72, something like that, wasn't it, Brett? Yeah. So that'll be important. And I guess any of the inflation numbers we now get in the next month, not just from the US but all over, it'll be data from March, so it'll be interesting, those numbers. So you're chucking all of that, you're chucking the earnings season. We need to see AI hype go into AI revenue and what's been actually built and so on. It's going to be a fascinating period. I think even if the geopolitical situation gets better, I don't think market's going to be boring, because they're certainly not going to be. it feels like these first 3 months have been a year. But Neja, you mentioned something just while we were chatting at the beginning of the podcast about M&A numbers that were looking pretty good.
Yeah, I saw interesting data about M&As, and I saw that in first quarter of 2026, we saw 20 mega deals above $10 billion. And this is the highest level since tracking of M&A deals began in 2008. So I think that's pretty interesting numbers since markets are not performing best in recent months, but those M&A deals are really not supporting current situation. I know that Brad has took a look at some of the current deals, and I don't know if you have something to add on that to explain the situation.
Yeah, it's just, I think the timing of them are really interesting, especially even just this week, right? Yeah. Even if we disregarded the quarter, you feel like markets are melting down. You have this geopolitical mess going on our hands. Oil's $100 a barrel, and yet Eli Lilly's out dropping, what is it, $7.5 billion. You have Biogen dropping multi-billion-dollar deal, McCormick, and this huge tie-up. Even Nvidia made another $2 billion investment in Marvell. They had a couple other $2 billion ones earlier in the month. It's like management teams are, probably rightfully so, but they're kind of feels like they're looking through this moment, still thinking long term, not even just this next couple quarters, but really these next few years, and planning accordingly, which is really what you want to see. But to me, it's just a little bit of reassurance, I guess. We kind of saw, I guess, if we wanted to really step back even a year and go back into the tariff sell-off, the drama that came with Liberation Day and the market pullback. We got into the earnings season in April, and we bottomed about a week before that started. But you really heard from those companies really not budging on their outlooks. They continued to invest in their businesses. They continued with their M&A deals. It disrupted the IPO pipeline a bit, understandably so. That's a different mechanism. But the decisions from management didn't really change, and they continued to make moves. So I think that really helped reassure investors. I don't know. Maybe we see the same thing this time around, but who knows?
Yeah, it's interesting. You mentioned obviously there Nvidia and Marvell. I don't know if anyone saw Jim Cramer tweeting yesterday. He goes, "I'm all in on Marvell," and I just thought, oh no. I just thought the comment section is going to be incredible, and all the Marvell shareholders were like, "Jim, what you done to us? No." And yeah, is exactly how you would expect. But yeah, all the jokes aside, it feels positive, doesn't it? Not things you would see in a really negative sentiment market. Just on the IPO, obviously big ones later in the year as well. Sorry, Neja.
Yeah, sorry. I just wanted to add that it seems that even companies are zooming out. They are preparing also for the future. And I was looking at Eli Lilly deal, and with this acquiring Contessa, this company, they're like expanding into more sleep disorders area because they were focused really on this weight loss drug. So you can see how companies are trying to improve their pipelines for the future and not dealing just with the current situation on the market.
Yeah, absolutely. Bring on the next 3 months. Obviously, Brett and I discussed the RIB last week, and it'd be fascinating to see what they're all thinking, what we're all thinking, right, as retail investors in 3 months' time, and where the land lies. But hopefully, for anyone that's not listening to this on a day called Wednesday, markets are still higher. We have a big speech potentially later from one of the most powerful people in the world. So fingers are crossed from me. Fingers are surely crossed from Brett and Neja too. Thank you all for joining us. Brett, Neja, thank you as always.
Thank you, guys. See you next week.
See you next week.
Take care, guys.